What is the key to becoming a consistent and profitable trader in today's market? That's the concept of this video here, and I want to help you guys out in getting you on that path to financial freedom. Now, I know you guys see a lot of this on social media, people having a lot of success in today's market. I know you guys see a lot of our members having a lot of success here. Now, how exactly are they doing it? Well, I like to break trading down and being a profitable trader into 3 key pillars. We're going to go over some specific trades that actually happened for me today, for you guys yesterday that are watching this video now. And I want to make sure that you understand this key thing that you need to incorporate in your trading, and most retail traders are not doing. There's a stat out there, it's like 98% of retail investors fail. And this is exactly why. So again, guys, before we get into all of that information here, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn and get on that path to financial freedom. So let's break down the 3 key pillars. So the first is going to be method. For me personally, I love trading with Trade 1348's Invictus and those key reversals around those key levels, along with the classic crosses. And for those of you guys who actually do not know, we recently released our Trade 1348 platform where you guys can get access to real-time unusual options activity, our Invictus and Pythagoras algorithms, the proprietary predictive trading algorithms that we have developed. Trader Joe was up 14% last year. That's the algorithm that trades on the daily time frame. Again, you guys all have access right now to a free 2-week trial. Make sure you guys take advantage of that. That is linked down below. But that's the method right there. So it's using Invictus, using the normal crosses, and using those reversals around the key levels. But again, your method is only going to be able to take you so far. Let's just say, for example, that you had a method that was able to generate you a 90% success rate, but you failed to manage risk. That's where money management comes in. If you fail to manage risk, that 10% of trades that is going against you can blow up your entire account super fast. Risk management is what separates the men from the boys, and emotional management kind of goes along with risk management as well. Now, when I tell you the secret here, quote unquote secret to successful trading, you're going to look at me and be like, yeah, obviously, I'd like you to bear with me. There's a lot of key nuances to this, and I'm going to actually go over exactly how to do this as well. The key word is consistency. Now, you might be thinking, obviously, STV, if I was able to consistently generate 1% a day, obviously, I'd be a millionaire in a year, 2 years, 3 years. Obviously, I get that. But I want you to think about consistency in a different way. It's not the consistency of the results necessarily, it's the consistency of your process and your risk management. Now, I want to go over a couple of examples for you guys on this as well. The first one is going to be on the SPY for me today. For you guys, this was yesterday. Now, we've used this replay function in the past for the risk management video, but we're going to play the price action of the SPY right here, and we're going to tie in the concepts that we've been talking about, the risk management strategy, which, again, all these videos are linked down below, the reversal strategy, and the stop-loss strategy as well. So this is the pre-market price action right here on the SPY. You can see as market opens, you're seeing things flash around a little bit. You see the market start to pop up. Then all of a sudden right here, this is what I want you guys to focus in on. You're about to get this 1348 cross down. Again, method. The method is telling you the trade is most likely going in one direction. But again, with all of our rules and the things that you guys have been learning in the curriculum, what do we need to wait for? Well, it's about to happen next. When we look at these couple of candles right here, you finally get this candle close down below this 200 EMA. Now, again, combining some of those principles, when you risk this 200 EMA or this blue pill line that I have drawn out right here, you know exactly what your risk is and it's defined. You need to have a consistent process in approaching risk management. It needs to be tight, consistent, and defined. Remember, we talked about this in one of the streams, but if you know the worst case scenario of going into any trade, it becomes a lot less scary to put your money at risk in that trade. You know exactly what you're risking, but in order to make sure that's exactly what you're risking, you need to be disciplined. I cannot harp on this enough. Now, this is really where it gets taken to the next level here. When we talk about my stop loss strategy in that video there, I said that I like to scale out between 5 and 10% when those trades are up there, up in that range in terms of profitability. And then I like to move a stop slightly higher than break even to make sure I'm securing my base hit. Why do I do this? I need to make sure that I'm taking my money off the table and giving myself defined downside, which in most cases, if you're setting your stop loss slightly in profit, is break even on the remaining contracts. But you technically have unlimited upside. Now on puts, technically your upside is defined, but on calls, your upside is technically limitless, but we don't need to get into that right now. Now looking at this trade here, if you are following a consistent process, what happens? You see your trade go up between 5 and 10%, and then what happens? Well, let's continue this price action and continue the chart from today. Which is actually yesterday for you guys. Now, looking at this right here, you can see price continuously just sells, 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 sells. Now, what have we said in the past? Sometimes your method is going to give you an awesome home run trade. But every single time you take a trade, you need to make sure that you have consistent approach. Now, moving on a little bit, we're going to go over Apple. Now, this is another one that ends up playing out very well. Now, we're playing this right here. You can see it's moving up in the pre-market. It gets that shark candle. Market open, it starts to sell off. You can see that it does get this put signal. It starts flashing around a little bit. And right here, you have an awesome risk-reward trade where you open this candle right here. It flashes up, does not close above this 200 EMA, and then it sharks. Now, what are we looking at right here? Well, we have these two key levels from Friday. If the trade is not up already by 5 or 10%, this would be a good spot in order to scale out and move stops into profit. Now, what this does, it's securing your base hit. You know that you are going to make money on the trade. That's not up for debate. You could literally turn your phone off and you're done. You could let the trade play out. Check it at the end of the day. Make sure that you close out of your position if you need to, and you're done. You move your stop into profit, you've scaled out, you've already made your money. Now, looking at this right here, what happens to Apple? And again, this was a trade that I actually got stopped out on. Yesterday, I ended up trying to front run on this candle. That's why we have that rule. Probably don't trade before 10. But look at this. It just continues to sell. And this is another example of when the method is going to give you a trade that is an absolute slam home run. But this is not always the case. You can't necessarily just hope every single time that you're taking these trades that this is going to happen. You need to set yourself up for a situation like this. Uber. Right here, Uber is getting an Invictus alert to the downside. Now, you can see there's a couple of key levels here that you need to be aware of. Now, it's very possible here that Uber, let's actually do a replay function on this. Make this a little bit easier. We can go here, play it at 0.5x. We're about to get the Invictus alert right here. And a lot of you guys did make money on this trade because you have your consistent approach. Now look at this right here. You get the Invictus alert. You guys can check exactly what time this was on platform. But this was an Invictus alert for you guys yesterday, for me today. Now you can see if we go based off of what percentage Uber is actually down in terms of the underlying stock, it's about 0.5%. That's decent. Your options contracts are going to be up a decent amount. If they're up over 5% and you're coming towards these levels, it makes sense to scale out and move your stops slightly into profit or at break even, depending on what stock you're trading and what spreads that option chain is actually going to be giving you. Now, what happens next? Well, let's just say here you secured your base hit. Now let's keep playing it. You can see that Uber sells off a little bit more, but then what? It rallies back up. It stops you out in profit or at break even. You secured your base hit. Now, I hope you guys see where I'm going with this. And the reason why you want to have a consistent approach to your trades. Sometimes the trades are going to play out like this. You hit a nasty trade, you're able to scale out, you move your stops into profit, and you just continually step them up. And you see price action just basically knife all the way into the end of the day. I believe Apple is a better example of this from yesterday when you see price just continuously fall. So when we're looking at this here, you start to see that the overall method itself takes a back seat. It's the risk management and discipline and your consistent approach and process to trading that actually becomes forefront and more important. And that's what most people don't understand. I don't want to use the term that I say with you guys on the streams, but if you guys are using multiple different strategies, you're trying to find things all over the place, you're thinking that there's going to be this one golden ticket of a system that's going to generate you these crazy returns, you're not going to find it. It does not exist. What you have to look for is a setup, a system that gives you an edge, which remember, an edge, all it is a higher probability of one outcome happening over another, and then it becomes a game of risk management. That is what trading is all about. And that's what most retail investors just fail to understand. It's a different way of thinking that you have to get through your heads. But risk management, I want this to be everybody's New Year's resolution. Discipline, emotional, and risk management need to be at the forefront of what you need to develop as a trader in 2023. These things and these concepts are going to help take you guys to the next level. So guys, that's going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. Other than that, I'll see you in the next one. Happy printing 1348, gang. Peace.